Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad, and today is Thursday, March 12, 2009. We begin our broadcast with two central bank decisions. First, late last afternoon, the Reserve Bank of New Zealand cut interest rates by 50 basis points to 3%. The bank believes that this reduction, which culminates a drop in the interest rate of 525 basis points in little more than 6 months, puts rates at a very stimulatory level. The bank said any future cuts will be much smaller and that there are no plans to move to a close to zero interest rate policy. The New Zealand dollar-US dollar pair jumped higher on the news and retained its gains throughout today's session, though there was a move down to the 0.5070 level in overnight trading. However, in New York trading, the pair reached a new 3-week high near 0.5165. We now run up against resistance from mid-late February around the 0.52 level. In a second interest rate decision, the Swiss National Bank cut rates by 25 basis points to 0.25%. More importantly, in its statement, the bank bemoaned the rise of the Swiss Franc since the crisis began in October and said that it would intervene in currency markets in order to make sure the Swiss franc doesn't appreciate further against the euro. That announcement that the Swiss National Bank wanted to enter the currency markets sent the Swiss franc plunging against its key rivals. The euro-franc pair surged 400 pips in the hours following the release, which extended a climb from the 1.48 level to a high of 1.53, smashing through several resistance levels along the way. The dollar-Swiss franc pair saw a similar huge rally as it rose from 1.160 prior to the SNB announcement to 1.1960 in the 2 hours following the decision. That intraday high was the strongest the greenback has been against the franc since December 11th of last year. We'll see if there is follow-through to these moves in the sessions to come, or if today's reaction was an overreaction to the bank's announcement. In fundamental news from Asia, Japan's final version of fourth quarter GDP was revised slightly upward to show the economy contracting at a 3.2% quarterly pace and a 12.1% annual pace. Both figures were slightly better than the preliminary release, but they still show an economy that was hard hit by a 13.8% drop in exports and a 5.4% drop in business investment spending. Australia's unemployment rate jumped to 5.2% in February from 4.8% in January. Though the employment change registered a positive 1,800 jobs gained, the underlying numbers paint a worse picture. The economy cut 53,800 full-time jobs, which were replaced by part-time employment, which increased by 55,600. That loss of full-time jobs was the most since November of 1991. The Aussie-Yen pair fell overnight, testing a new low for the week at the 61.40 level. That was brought about by weaker stocks in Asia and European markets, which started off in the red. However, in New York trading, U.S. stocks managed a rally, which helped boost risk appetite and brought the pair back up above its starting point for the session and was testing the 63.80 level as of 2:30 p.m. Eastern. In Europe, producer prices fell into negative territory in annual terms for the first time since 2004 for the January period. Prices were down 0.5% on the year, following a downwardly revised 1.2% increase in December. The figure surprised forecasts and shows that price disinflation is still very prevalent in the Eurozone. On the month, prices are down 0.8%, which was a much bigger drop than forecast. In Germany, industrial production disappointed forecasts and comes in on the heels of a very weak factory orders report. Output in Germany fell 7.5% on the month in January, which more than doubled the 3% expected fall, and is now the 5th month in a row that output has been down. On the year, production levels are 22.8% lower. Both the monthly and annual drops were the biggest since Germany reunified in 1990. The euro-dollar pair remained within its range from yesterday, falling lower to the 1.2750 level from its intraday high near 1.2870. Today's support was resistance last Friday, and with this line holding, it sets up as a power line. Compared to some of the other moves, though, today, the euro-dollar was rather subdued. In fundamental news from the U.S., retail sales fell slightly in February, but the 0.1% drop was much better than expected. Also, January's figure was revised higher to show increase in sales during that month. Spending on furniture, clothing, and electronics suggested that consumers were somewhat resilient to the recession. Automobiles and parts sales were down 4.3%, leading the sector that showed a significant decline. New U.S. claims for unemployment benefits rebounded last week, while total claims hit a new record high. There were 654,000 people claiming first-time benefits for the week ending March 7th, which was 9,000 more than the previous week. The figure was above expectations. The number of total people collecting unemployment for more than 1 week rose to 5.31 million. The data suggests the U.S. labor market remains very weak, and companies continue to lay off workers at a rapid pace to lower their costs. U.S. business inventories fell by 1.1% in January compared to December, a decrease that was slightly smaller than expected. Sales were down 1%. In a move similar to the Aussie yen we looked at before, the dollar-yen pair at first fell sharply overnight, reaching a low at 95.66. That was a 300 pip fall from the levels seen early in yesterday's session. However, as U.S. retail sales data came in better than expected and U.S. stocks rose throughout today's session, the dollar recovered its losses and was trading near the 98 level by 3 p.m. Eastern. That tested our previous level of support that had held as support throughout most of February and March. Now that we've looked at today's news and highlights, let's see what we have in store tonight and tomorrow. First, New Zealand will release its retail sales data, which is followed by Japan's industrial production. Overnight, Japan posts consumer confidence data, Germany releases wholesale prices, Switzerland posts its producer prices, and the Eurozone reveals its January retail sales. Tomorrow, Canada will release data on employment change and its unemployment rate, along with its trade balance, while the U.S. will post its trade balance, its import price index, and the UMich Consumer Sentiment Survey for mid-March. And that wraps up today's busy day in the markets. Thank you for joining us here at CMSFX.com, and happy trading.